to A Well-Designed Business. My name is LuAnn, and I'm so glad you found this podcast. Together with my husband Vince and our partner Bill, we have grown our company WindowWorks from the ground up. So I know and I understand the challenges you face in running your interior design business. I also know that your talent alone isn't enough to ensure your success. So on this podcast, we talk about strategies and practical steps to help you grow your business. But make no mistake about it, we have our share of fun here too, mixed in with those aha moments that I love so much. This isn't fluff. Nobody has time for that. Whether you are a new interior designer or a seasoned designer, I am here to help you create and to manage the kind of interior design firm that you dream of. It's straight talk and it's action. Are you ready? Let's get started. Hey everybody, welcome to another episode of A Well-Designed Business. It's Power Talk Friday, and I am so happy to tell you that I have one of my good friends, Michele Williams, back with me. Michele Williams, as you know, is the owner of the Scarlet Thread Consulting. She is also a certified Profit First coach, and she is one of the co-authors in my upcoming book. Hi, Michele. How are you?
I'm great, LuAnn. How are you?
I'm good. I'm really good. And I'm excited for this conversation because I love talking to you, Michele, because you always have me, there's always at one moment I go, oh, aha moment on that. So I'm really happy. You were one of the guest speakers at my Power Talk Friday tour in High Point this past fall, October 2018. And in your presentation, I experienced quite a few of those. And interestingly, you did an exercise with us in that presentation that we have decided that we're going to share with our listeners, with our buddies out here in podcast land today, that exercise. So I'm looking forward to that because it was a very eye-opening exercise, and it really helps us as business owners dial in on what's important with our finances so that we can be successful and profitable, right?
Exactly. And I loved when we were there that your team, when it was time to do this, you all got together to do it. And
yes.
I love we'll talk about it, but it was like, do we do that? Do we do that? How do we do that? It was just fun to hear.
Yeah, it was terrific. Vinny and Kim and myself, we were like, yeah, we've got that. And what does this mean? And blah, blah, blah. A couple of them were like, Vin, do you do that?
Yeah, it was kind of like the podcast you just did recently when you made a comment about Profit First and making this comment to Vin. He's like, LuAnn, duh, we've had 3 bank accounts for how many years? Exactly. It was that same kind of moment just lived out in front of me.
That's
so it was
right. Wow. That's exactly right. It's so fun. So, but the thing is, and the reason why this conversation is important is, and I say it all the time in my coaching, is that I have a level of understanding of our finances and what's important, but I don't have a deep level of understanding of the execution of all components of it because I do very easily and heavily rely on Vin. But, so many of the interior designers, they ask me, what do I do if I don't have a VIN? And then the answer is, I'm sorry, sweetie, you're going to have to learn this stuff. You know what I'm saying? Like you can't just ignore it because you don't have the most trusted person that could possibly be in your world as the one who is handling and overseeing this part of your business. I mean, even if somebody has a business partner that is not a spouse, I'm like, you got to be wise, eyes wide open. I can have mine a little closed. And I don't even advocate having eyes closed at all. It's just that we are now in such a dance, Vin and I, that we work in each our own zone of genius. And he doesn't oversee hiring and training employees. And like my cousin Eileen, another co-author, calls it the care and feeding of our employees. Just like I don't oversee the monthly visits to the CPA. You know what I mean? It's like, it's enough. You do what you do. I'll do what I do. So we're going to get to all of that. But before we do, I just want to take care of a little bit of housekeeping, Michele. So first, it's a big, huge thank you to Cravit. As we all know, Cravit has sponsored this podcast from the very beginning, from before it was even a podcast. And you all also do know that Cravit offers you a one-time 10% off any Cravit fabric wallpaper or trim. So when you go into your interior design, into your business account for Cravit, when you get ready to check out, you use the code AWDB10 and you can get 10% off. But the big thing that I want to say about Cravit right now is that my 3rd birthday party for the podcast is coming up, and this year Cravit is hosting the podcast birthday party. So this is the big news, okay? So definitely save yourself 10%. Michele wants you to save 10% and use that to reinvest in your business, and so do I. But I would love to see your face at this birthday party, and we're going to have it on February 5th at the Cravit showroom at the D&D building in New York City. And it's just so convenient for me and for all of you that every year my birthday party coincides with the New York gift show. So if you're coming in from out of town and you've already got your plane, trains, automobiles, and hotel reservations, you can come to the party. Love to see you. Of course, it's an invitation. This is a free event. And the only thing that we do ask is that you do RSVP through the Eventbrite link, because, of course, Cravit is going to be having food and wine and so forth for us, and they need to know how much to have. So you can find that on LuAnnNigara.com and click on attend a live event, and then scroll down until you see the one that is inviting you to the podcast birthday party. So I hope to see you there. All righty. Now, Michele, we're going to run through this a little bit, okay? This was, as we talked about, an eye-opening exercise. And I do want to just share, if this is the first time, if you're a new listener to the show, and Michele Williams you're not familiar with, you need to understand, before we go any further, why Michele is coming on to my show for the 3rd time today. She has been working in the design industry for more than 18 years. Michele is one of those business coaches that is absolutely fiercely committed to helping you be profitable and maintain your profitability, okay? She helps you by building your confidence to charge what you are worth, by helping you in sharing information and education and systems for money management and financial awareness, okay? She's also a Profit First certified coach, which you've heard me talk on the show multiple times how much I love this concept of Profit First. And of course, you can reach her at scarletthreadconsulting.com. And also, the big other news is that she is one of the co-authors in my upcoming book, The Things I Learned from a Well-Designed Business, the Power Talk Friday Experts, which we are launching together, right, Michele, this March?
Yes.
Yay! So March 30th in New Jersey at LuAnn Nigara Live. It's about the conversation. And we are going to get together for 2.5 days, and it's going to be me, Michele, our 11 co-authors. All of us are going to be there, and we are literally going to blow your mind. That's all I'm telling you. It's going to be outstanding. And so I'm looking forward to that. So without further ado, Michele, let's talk about this exercise that you had us do just to get us thinking, because then actually in the Power Talk Friday tour, we went into it. You went into the details of this, but this exercise is a good thinking point, and all we're going to be able to do today is accomplish getting through the questions. They're going to have to answer their own, answer them on their own. But when you come up with the answers, if you don't score really well, it is a high indicator that you need some help, right, Michele?
Yeah, and I want to set the stage before we start jumping into the questions,
Sure.
Because I just am going to say, again, having been in this industry for 18 years and then working in financial software prior to that, and having, a coaching business focused on profitability, it is a topic that a lot of people don't want to talk about. And I think I even mentioned this to you on it was the first or the second time that we talked on the podcast, LuAnn, and you make this comment all the time. Just because you don't want to look at it doesn't mean it's happening. You cannot put your head in the sand. And, I get that that this is not maybe everybody's cup of tea, to understand the numbers and the financials. But here's what I say on my podcast, Profit is a Choice, and what you've said, and I'll say it all the time. We're a smart crowd. We are a smart bunch. We really are. And we work with numbers and math all day, every day. And if we can figure out how to lay out a kitchen and how many tiles we need and how much fabric we need and how to mark up, and mark down, if we can do that, we can do this. And so I just want to start by just telling everybody, this is possible. I am not asking anybody to be a CPA. I'm not even asking you to be a bookkeeper. I'm asking us to be able to know that there are certain numbers and certain indicators in our business that are going to kind of paint a picture of where we are. And the only way, my business coach sent me a similar exercise, but of course with totally different questions, and just said to me, Michele, I want you to tell me where you are right now so I know what you're working on. So there is nothing wrong with this. I have my clients, my one-to-one clients, they fill this out every January and every July. So we look at it, and if we're really working towards some certain goal, we may go back and address it every quarter. But I'm just a big proponent of, I need to know it's happening. So I might as well know so that I have a chance to change the conversation, right? To change the trajectory of my business and to know which pieces and part affect that change. So I just want to give confidence to everybody that these are things that you can figure out. Don't let the verbiage or just even the exercise scare you. Instead, go into it with the idea that I can know my numbers this year and I can make them work for me. I mean, I take the things, LuAnn, that I don't want to do or that I feel like I'm challenged in, and I write an affirmation as if I've already done it. Right. And so I'm just going to tell our listeners, go write your affirmations. 2019 is the year I'm going to understand my financials. Right. Notice I didn't say the year to do your financials, right? So I'm not asking you to go, again, do all your tax documents. I'm asking you to understand them. Right. So with that said, let's jump in and look at it.
Okay. And I just want to also say one thing too, is to your point, is wrapped up in there in your message is the statement, is what I want people to hear clearly, is there's no expectation that you are probably going to be okay in every one of these categories. That's right. That's the thing. Yeah. It's not like, I don't want to let anybody know. This is how we get better. It's like you said, it's the measuring. You do it with a coaching client twice a year because, you're looking for improvement. There, if there was mastery, you'd be out there teaching this rather than being an interior designer. So that's, I just want to make sure wrapped up in your message. And I know that's what you're trying to also indicate. So go ahead. Absolutely. All right, let's get started.
And before we read this first question, if anybody wants to, if you're listening and you're one of those, let's get a piece of paper and pen. If you pause, go out to my website, scarletthreadconsulting.com. There's a purple bar across the top. When you click on that, it will download this exercise for you for free that we're doing. So every one of you has access. Scarletthreadconsulting.com is called a financial health checkup. And you can download it and have at it and figure it out.
I love it. That's great.
And look at it. Okay? So free resource. All right. I remember a couple of years ago, I made a comment. We were talking about hobbyists and business owners, and we were in a meeting, and I said, I can ask one question and have a pretty firm idea on if somebody is a hobbyist or a business owner. And that was all I said. The room got quiet. Every eye turned to me. And of course, what's the question? Michele, what is the question? Yeah. What is the one thing we need to answer? And I said, what is your total sales or total income to date? And did you know that maybe 1 out of 25 people can tell me that number?
I know, because it's one of the first questions that I ask when
It's the first question. And I just want to say, people will call me LuAnn. I know they call you Nancy, Gans. There are many of us out there that they call and they say, I need this help. Well, the only way to really help somebody in a certain area is to know where you currently are, right? It's hard for me to help you get where you want to go if I don't know where you are. And that total sales, that total income is a huge indicator. And knowing where it is, and I don't mean knowing where it is on April the 14th or March the 14th before you file those tax documents. I mean knowing within a few $1,000s all year long at any point in time because you have an eye on it. At a minimum once a month. Again, I'm not telling you to go be a QuickBooks Pro, but you should be able to get these reports that can tell you that. So that's the first thing. You've got to know how much you're selling. You got to know how much income is coming in. Now, I want to just do a quick aside and say, if you are commingling funds in any way, meaning you're kind of half business funds and half home funds, you're paying for the braces out of your account, it's going to be really difficult. Number one, you are piercing a corporate veil. We can have a whole separate conversation on that. But number two, it is very difficult to really manage your company and take it where you want to go because it's too convoluted. There are too many things in there, and it's really going to be bad for you if you ever get audited. So my suggestion with all of this is to know that these are business bank accounts and only business transactions run through it. So I just want to put that out there in case you're looking at it.
Absolutely.
So would you agree with that? That's one of the very first 100%.
questions.
Know your total sales.
That's right. And it's like, what were your total sales from last year, and what are your total sales to date? I mean,
that's right, which is the next question.
Yep.
So, how much have I sold today? I mean, I may even ask you, what do you anticipate coming in? The third question on here is, have you created a clear sales goal for the year? Mm-hmm. I am amazed at, and I've done it myself. So when I say amazed, I think I'm amazed that other people were doing what I was doing because I was doing it so wrong, right? So I didn't get all this right at the beginning. The book that is coming out will tell you that. But do you have a clear sales goal? It is so much easier to have a goal because it gives you something to stretch and reach for, and it allows you to create a plan to get there as opposed to saying, I'm just going to take what comes in. And so I think this question is important because it helps you tie it all together, and it provides a metric for you to figure out if the actions that you're taking in your company are actually supporting you.
Mm-hmm. And I'll tell you that at WindowWorks, we take it two subsets under your number three. So your number three is we have created a clear sales goal for this year. We then project it and divide it out for every month. And then we divide it by every salesperson, and then every salesperson has a daily sales goal.
Yes,
I mean,
I
it's
do
the
that
Vin
in my
man,
company
Michelle.
as well. I do that in my company. So I start with my yearly sales goal, and I'm the only one selling in my company.
Sure.
I mean, it's me, and me,
sure.
right?
Yeah.
But I look at my sales goal for the year, and then I break it down into quarters. Because sometimes let's be honest, there are fluctuations. Some months are better than others.
That's right.
But by and large, each quarter has a slower month in it for most of us. Mm-hmm. So if I can look at it per quarter, then I look at it per month. I even go farther than that. And I teach this in my Understanding Your Financials course, how to balance it based on percentages. So then I'll go back and actually do research to say which of my months were heavier, what percentage of the full year were. You know what I mean?
That's
so then
how we come up with our monthly goals by that process. Yep.
Right. So it's not always just a divide by 12 and that's what you get.
No, it is not. If it was a divide by 12, there'd be no reason to break it down by month really, because it would automatically have a division. But for us, we might have a monthly sales goal in January of 200,000, but in July it could be 450,000 because we know the cycles of the industry. And the only way you know that is by keeping the records of your own sales cycles every single day, every single month, every single year, and then go back and analyze it. And so it's a tool that helps you in so many ways. It helps you to stay motivated. It helps you to stay knowledgeable. It helps you to not spend money when you don't have it. But it also helps you when you close that year out and you're ready to sit down and set your goals and your projections and your quotas for the following year, right?
Oh, sure. And I'll say, I am a huge fan of QuickBooks because if you just input the data, it keeps it for you.
Oh,
I can go all the way back. I can run reports and look at every month and what percentage of my total sales it was. I can also look at what percentage of my total expenses it was for the year. So there's, if you use a good accounting system, whichever one you use, it needs to be a full-blown accounting system that captures this data, because it can then, the reporting is critical. Otherwise, you're sitting down to do it. And I got to tell you, nobody's got time for that. I don't have time for that. No. I need to be able to run a report and see it and extract the data. But starting at a minimum with a clear sales goal for the year that could then later be divided down based on employee, on season, on quarter, on day, on month, whatever, it allows you to do that. But you got to start with a goal.
Right. Absolutely. Absolutely. Okay. So, and here's the other thing that we've said this at the beginning, but I feel like we've already, people are already would be like, oh my God, my eyes are glazing over. So the point of this is it's not possible in a 1-hour discussion for you to teach us the individual ways to do these steps. Okay. So for instance, we're asking, do you know your total sales from last year? We're asking, do you know your sales to date? Okay. We're asking if you've set a clear goal. The point is, if I were to ask you, hey, let's figure this out and teach somebody how to do it, that'd be another 25, 30 minutes. So this is the overview.
We could have a podcast on every one.
Exactly. That's my point, right? Exactly my point. So this is the overview so that you have a snapshot at the end of your personal expert levelness, your personal, where you are in understanding your financials. And from the evaluation of that, you would go back up and find out where the gaps are and work on them. So I don't want anybody we're giving you the big picture, and you will need to drill into the smaller picture, either with an accountant, with a bookkeeper, with a coach, with an advisor, with somebody. Okay. All right.
Yes, exactly. And I do have the course, Understanding Your Financials,
that
good. Teaches you that. Yeah, that teaches you all of this. But, not everybody necessarily needs that. Not one course solves everybody's issue. Let's just say that. But what I will say is, a lot of times when we look at it, to your point too, we think, I don't understand my financials. And it seems like this great, big, hairy beast. And you go, I don't even know where to start, so I'm not going to start.
Right.
And I'm going to cut to the chase and tell you where to start. Right now, before we keep going. So I think it might also alleviate a little bit of that stress. Start by just saying you're willing to take a look at what you know and what you don't know.
Love it. That's basically what this is. What do I know and what do I don't know? Right. Good way to put it.
Yep. What do I know? What am I aware of? What's in my, vision, and what is in the outside of my periphery? What do I not know? What do I not understand? And where do I need to gain clarity? On this document, it has you rank all of these from a 1 to a 5, with 1 being, I don't really get it, don't know, have no clue. Total sales, what is total sales, right? And 5 says, I get it, I got it, got the number, move on.
Right.
Then when you're done, you go look at all the 1s. Start there. Don't start on the 4s and the 5s. Those are okay.
Right.
Start on the 1s. So what it really does is gives you at the end a direction of where to place your focus, because we only have a limited amount of time as a resource. And so this is meant to be a helpful guide, not, it's a tool. It's a tool.
Right. Exactly. Okay. I love it. It's meant to show you what you know and what you don't know. Great. Love it.
And where to focus your time. That's it. That's why you can see now, if you do it every quarter, you should be able to see some of your 1s move up to number 2s. We might then take some number 2s and move them up to number 3s, and maybe a 5 slipped because you quit looking at it. So it's just, right? It can slip. Just because you have a 5 one time doesn't mean it stays there.
That's a good point. Very good
just
point.
A tool. Okay, let's jump in and look at number 4. What is our gross profit margin? And do we have a goal that is clearly defined? So it's not enough to look at a profit and loss statement and say, well, here's my gross profit margin, without looking at how it fits towards a goal. That's the whole thing we do in Profit First, is we set percentage goals for how the money is going to be spent. We tell our money where to go instead of letting it tell us. We are the boss of our money. Okay. And say, right, I want to be the boss of my money.
That's it. I just want to be the boss, period.
Yeah, me too. Okay, so my kids used to always fight over who got to be the line leader. That's what they always wanted to do. I'm like, you just want to be in control. Well, I do too. I want to look at my bank account. I want to look at my numbers and know where they are. And it starts as you can tell, we're working down a P&L here. What are your total sales? What is your gross profit margin goal? Now, I would say that I love a gross profit margin goal between 40 and 60%. Mm-hmm. Higher than 60, I mean, I'm going to raise my hands and do a big happy dance for you. But I would tell you it's usually 40 to 60%. Under 40% on a gross profit margin, and in most cases, not every case, but in most cases, that shows me that somebody is working their fingers to the bone and they're not making a lot of money. Not always, but it is an indicator. Right. Gross profit margin, if you think about it, is the money that you actually have to run the business, because all the difference between gross profit margin and total sales, that's the money that went out for product. So it's important to have that goal and to measure not only individual projects by that, but your company financials by that goal. Right. Okay, so this gives you a chance to set it.
Right. And I have to say, most people that we work with are not anywhere near the 40%, let alone the 60%. Don't you agree?
You know, a lot of my clients are.
Well, good, because you've taught them to get there.
Because
I mean, when you start with them.
I'm talking about
when you start with them, Michele.
No, you're right. When they come in, a lot of them are not. I'll tell you where I see a lot of 30 to 32%.
Right. That's what I see, too.
That's where I see.
That's what I see, too. And it's not sustainable. It's not enough. It's not enough money. What's funny is, you mentioned 40 to 60 and over 60 high five. WindowWorks are as a group, as a whole, I want to say we're 53 or 54%. But Vin always goes out of his way to make sure he tells LuAnn, my personal is at 67%. So, because I love to see what I can do with those numbers. So.
Me too. And I think the part that pains me, and I know it pains you, which is, of course, a lot of why you offer the educational tools and resources and podcasts that you do, is it doesn't have to be that way.
No,
it just doesn't have to be that way. And so my whole focus is to figure out what's happening in the business that is resulting in a profit margin that's not sustainable and that doesn't allow you to run the company or hire somebody or pay yourself and fix it. But again, you got to know what the profit margin goal is. Mm-hmm. I would say that if you are just starting, just aim for 40%. Aim for it.
Right. Love it.
The next question behind that is, we have set a net profit margin to maintain that supports our company goals. Now, this is walking all the way to the bottom of the profit and loss statement. So if you have a gross profit margin of 40%, that is an indicator that 40% of every dollar that comes in the company goes to run the company. That's to pay for overhead, salaries, profit, taxes, whatever it is that the company has to pay. Net profit margin says what's kind of left over after everything's been paid. Mm-hmm. And so for that, it can vary. If somebody is an S corporation, their net profit may be very different than somebody who is an LLC because of the way salary is handled. But know what profit margin you need and set that goal, and then work to make sure that all of your choices are maintained to reach that goal. And if not, at least be aware of it, right?
Right, exactly. Right.
Okay. The sixth question, our financial reports are maintained and analyzed regularly. Yeah, right? Now, what does regularly mean? For some clients, their sales, let's say that you are a retail company, you may want to look at these things weekly. I mean, how often does Vin look at all of your reports? He's probably daily.
Yeah.
He's going to get text messages and he's already watching them, right?
There are several things from the financial standpoint that he looks at every day, even a couple of times a day. Like the bank account, he will literally check 3 to 4 times a day. Literally 3 to 4 times a day. He will put a deposit in, he will come back and look to see that the deposit shows up. I mean, he's a lunatic. He's an absolute lunatic. But the thing is, he finds stuff all the time. And then there are other things that he's doing on a weekly basis. And then, of course, you've got your monthly and your quarterly. But it is at the very, very least, Friday is his day. He does not leave for the weekend without running through every single thing that he needs to run through to know that the business is financially healthy.
Right. I do the same thing. I don't check quite hourly, but I do have QuickBooks open. I know. You're right. Everybody needs a VIN. But my husband, okay, on the family side of thing, my husband has every time our Amex or every time one of our cards is hit, it comes up on his phone and has a text message. He has all the stocks showing up. So he's checking our personal finances. We do those in our home life. Why are we not looking at them in our business life? Right. We do it at home, right? If we deposited a check, you can be doggone sure we want to make sure it went into the bank and didn't go out into la la land. So I'm just please begging people to create financial reports. Now, again, I'm going to say this. Regularly does not mean the date that you have to get them together for your taxes. Right. I just talked to a couple of designers we're in January, just in the past couple of weeks, who've called me. They don't have any accounting software up. And so they are literally digging through boxes and digging through Excel spreadsheets. And I get it. I've done that.
I know.
But
We've all
they
been
realize, there. Yeah, but to get where they want to go, that is not serving them because they can't make decisions. The goal in all of this is to allow you to make decisions and to find errors early. Right. I love how you said Vin knows what to check and he checks it and he finds things. I find things people went out and bought dog food or something stupid off my account. And they started buying small before they bought big. And I was able to catch it early because I was watching it. One time they were buying car parts in Michigan for my car. I'm like, what?
So do you remember the story that I told in my first book about when I had to run the entire business for the 18 months that Vin had went over and took a position as vice president of Decorating Den? Do you remember that story I told in that book?
I don't know.
Okay, so
I don't think so.
Here's the thing. There was an 18-month period where I had to be the managing partner as well as the lead salesperson. Because it was our first recession. It was a major, it hit us. We were not ready for it. We had no idea. It was the first time anything like, so I said, a lot of the things we say, hey, do this. It's not because, we just were tapped on the head and we were automatically good at it. It's to your point in when you started in your chapter in my book, you tell that a lot that you learn this is from having made the mistake. Okay. So we made the mistake going into the first recession in business with our eyes closed about the recession, and we almost went under. And in order to not go under, we took Vin off the business, and he went out and got a position as vice president of Decorating Den for franchise sales for North America. And this was a great decision on our part because he was the biggest salary and he was the easiest to get out of our day-to-day because you couldn't have the window works without somebody selling, and that was me, and you couldn't have window works without somebody installing, and that was Billy. But you could have window works without somebody managing it because that just meant that LuAnn went and managed after she was done selling. Okay, so I had like a 90-hour day, right? But this was survival. This was go out of business, all employees, everything, or do this. So we do it. And of course, I'm working out of my zone of genius. I am now handling all of the banking, all of the financials, like holy sweet Jesus. Okay. Right. Yeah. That's joke. So right. Funny. Now, of course, let's not misunderstand. He was there for the end of month rendering, and he was there for the quarterly taxes and all of that stuff. He's not silly, dumb in the head and going to say, hey, go ahead, run the whole thing. But the day to day I was running. And so here's what happens, Michelle. I'm sitting at my desk one day and the phone rings. And it's the bank on the phone. And the guy says, well, can I talk to LuAnn? Actually, he has to talk to Vin. And, they look, Vin's not here. Do you want to talk to his wife? Sure. Gets on the phone. He's like, blah, blah, blah. He said, this is uncomfortable for me. He said, but your account is overdrawn. And I'm like, it is? Now, I'm immediately terrified, like honestly terrified. And so I said, what do you mean by like how much? And he's like, it was 5 figures. Okay. And I'm like, wait a minute. Like, I know I can't add and subtract, but I'm not that dumb. You know what I mean? And I'm like, I pull out my bank statement, my bank account, my checking account book. And I'm just like, no. You see, I show that I have X amount of dollars in here. And he's like, well, and I said, what's happening? And he said, for a day and a half, everything. And this is before instant online banking. This is like, if you bounce the check, you got a letter in the mail and it took 4 days for you to get the stupid letter. Right. And he said, well, I just just looked at it. He goes, yesterday there was a lot of checks bouncing. Today there's a lot more checks bouncing. He said, by the end of business, you're probably going to have about 12 or 13 checks bouncing. And I'm just like, what? And I said, nobody told me. He goes, well, the letters are going out. He said, but you won't get them for a couple of days. He goes, but that's why I'm calling you. He said, because I know Vin and he has banked here for, however many years. He said, and I know something's wrong. And Michelle, you do not know the terror. And I said, well, what are we going to do about all the checks? He goes, no, I'm going to pay all of those. He goes, I did not bounce them. He goes, you're getting notices that they're bouncing. He said, but I've paid them because I know your company and I know Vin. And I said, okay, I'm coming right down. I'm getting in the car right now. You don't understand, because I'm like, I got to call Vinny in Washington, D.C. and tell him that, I totally there's no way. I'm just like, I was literally shaking. And I drive down there and we get there. And of course, what do? I go right to my deposit slips and I'm like, I add them all up and I bring them down. And I said, look, here's like $75,000 worth of, deposits in the last 3 weeks, blah, 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 blah. Well, it turned out that I had grabbed a stack of deposit slips that was from a closed bank account of ours.
Oh.
And for 3 weeks, I was depositing in the wrong account. Now,
depositing in one, withdrawing from another.
Exactly. And the thing was, it was a dead account. It wasn't even an account that were used. And that whole, I'm saying to the guy, but I have the stamp on the back for deposit only, WindowWorks XYZ account. He goes, yeah, we don't look at that. What? What? And so but there's the lesson of looking at your bank account every single day, every single deposit. Because if I had done anything like that, I don't even know how I would have done that in 1993. But if I had done, right now, there's no excuse not to do that. And we would never get past one day now with an error like that, because Vin looks at it. First thing, he has his breakfast. The first thing he does every morning is go right and he opens up every bank account.
And, that's exactly why Profit First works so well when it is put into practice, is because they know that our human nature is to go look at the bank account to make decisions, not just to look at financial reports to make decisions. Mm-hmm. And so it really allows us to do both, because Vin has, in effect, done that, right? Mm-hmm. And so, I don't look at my balance sheet every day. I don't do that. Right. I don't look necessarily at my profit and loss every day. I do probably look at it at least once a week. And, maybe there is a report that each person, each company, even as a bank account, there's something that you need to look at every day. Decide what it is you need to look at every day, every week, every 2 weeks, every month, whatever. Create a schedule for that. Put it in your calendar and then look at it. Mm-hmm. And after a while, it just becomes second nature. It's like Vin doesn't even stop and think, I need to go check. He just checks.
Habit. It's just habit. It's like brushing his teeth. He gets up, he does this, he does that. And the next thing on the list is he looks at the accounts. Yep. But it's a great lesson. And I appreciate, that you are, teaching these things and putting them in these questions of do you know these things, right?
Right. Well, again, I teach from things I did wrong. So, and knew better, right? But didn't know how to. Here's the difference. We know these things quite often, again, in our home life. I knew them, how to create software, but I didn't stop and think about it in the business. I got wrapped up in what I was doing as part of the business. I got wrapped up in the design. I got wrapped up in the task. And I just assumed that, to your point, if I deposit and then I withdraw, I kind of had a running total in my head. I'm not going to get out of alignment. And then I did.
Mm-hmm. Well, and in my case, I actually had it legitimately in the checkbook, but I just wasn't putting the money in the right checkbook. It was crazy.
And again, if you have Profit First, you do have to watch that. I sometimes have accidentally gone into QuickBooks and put it in one of my 5 or 6 accounts instead of, the other account it should have been in.
Exactly.
And so it is something you do need to look at. Mm-hmm. So add that in.
Yep.
The 7th question is, we have defined our top 2 profit centers and have all company goals aligned to maintain them. Ooh. So this is where we really start then getting into, how does this fit into marketing? How does this fit in to employees and staffing, and where are people buying, and what is it that we're we're selling. Your top 2 profit centers are the areas where you're making the most money. And so sometimes those may cost you more, they may cost you less, but it's defining where is the money coming in at the highest rate, and am I focused on making sure that my company is in alignment to allow me to do more of that?
Right.
If you're doing most of your sales on, let's say, color consults, and you are killing it, then you might want to focus there.
Right.
But if you're only, you sold 2 color consults all year and everything else came in for kitchen renovations, well, then you might want to focus there. So it really starts to help you look at financially, is the profit center in alignment with what I'm marketing or where I've put my other company resources?
Right. I love it. It's so true, because sometimes we get distracted by the things that we want to do, but not necessarily the things that are the most profitable to do. And you have to keep an eye on what is a profit maker for your business, not just what is fun to do.
It's interesting. We even do this sometimes when we start looking at, who are your top 2 clients? Or let's say if you were wholesale, who are your top 2 designers? Or if you're a designer, who are the top 2 vendors that you buy from? Sometimes we have an idea in our head of who it is, and when we run the numbers, it bears out differently.
Right.
And so we can't always trust what we think. Sometimes that other person, maybe there's a resource that you work with or a client that you work with that's not needy. They're not the squeaky wheel. And it may mean that you make more off them, but they're not top of mind because they're easy.
Right.
They're easy to work with. But the numbers need to bear it out.
Right. Exactly. I love it.
So then the next question that leads right behind that is, who are my top 2 clients in income? Because this goes back to the idea of pumpkin plan, or the idea of every company has limited resources. And am I spending those resources in a way that it brings me top dollar? Because quite often our resources are expended on those that are sucking the stinking life out of us, and they're not even the ones who are bringing in the money for our company. And so identifying where your profit centers are. So what are the packages or offerings that are bringing in the most money, and who are my top clients? Because I want all hands on deck to protect those top clients and not that bottom client. I'm not saying I'm not going to give great service to them, but it's no different than if you were to buy from a vendor as a designer and you were to spend $100,000 with them. And let's say this other designer came in and bought a $1,000 table, and you both had a problem on the same day. Who would we expect them, if they had limited resources, to answer first? Right. They're going to answer, if they're smart, that $100,000 client.
Right.
And then they're going to answer the $1,000 client.
Right. And the thing with that is, too, is it's, to your point, the squeaky wheel might be the one who's getting the grease. But it is a well, made point, Michele, that you do have to always keeping the best clients happy. And because they're not complaining doesn't necessarily indicate that they're happy. Right. And it's funny because, it's reminding me of Stacey Brown Randall, one of our co-authors, how she has the whole system for getting referrals without asking for a referral. And a lot of that is wrapped up in keeping your top clients actually happy and letting them know that you value and appreciate them. Because just because I'm not complaining, just because I'm not doing anything, doesn't mean I'm absolutely sitting out here being wowed, or that I even remember that you wowed me, right? So it's about that whole, I love that idea of identifying our top clients in terms of the income that they give us, that they bring to us, and then figure out how that we focus on them and make them feel well cared for.
So what's interesting in my coaching practice is sometimes I'll have a designer that we're working through their goal setting, let's say their financial goals. It could be any goal. And we do these 2 things. We look at what are your top profit centers, packages, offerings, things that you sell, and who are your top clients. And then I ask them, if you could duplicate just those 2 things over and over and over, would you be happy? If they say yes, man, we are zeroed in. As they say, we are cooking with gas. We can go. But if they say to me, that's my highest income client, for dollars to me, but I hate every time they call. My stomach feels like I'm going to be ill when the email comes through. That is an indicator that they may be paying you a lot, but they're not your ideal. Or what you sold them might not have been an ideal project. So when you start to look at who are the top 2 offerings and the top 2 clients, and if you don't feel like you could replicate and duplicate them like all day long, you need to stop and ask why. What is it where did the breakdown happen? Because that is a screaming, signal that something's not in alignment there.
Right.
And I don't want to keep selling more and more and more to somebody I don't like or don't enjoy working with, because at some point it is going to get nasty, because I'm going to feel devalued. They're going to feel devalued. And so it just makes it kind of just on the table, black and white. Let's just look at it.
Mm-hmm.
So
I love it.
Okay. You ready for this next one?
Mm-hmm. I ask this every time too.
And this is a big one. We have set aside funds for owner's pay.
Mm-hmm.
Have you set aside funds for owner's pay? How does that fit into those net profit goals, to the gross profit goals? Because if you have a gross profit of $50,000 and you want your owner's pay to be $100,000, it's not possible. Right? Owner's pay is always going to be less unless you are doing something really shady than gross profit. Right? And I have seen people where their net profit, let's say, is $50,000 and they did an owner's draw of 75. And what I have to explain to them is that they pulled from the year before. They pulled from reserves, right? Mm-hmm. The company didn't earn that and sustain that and didn't have the ability to pay you that. So you actually are using the company's savings. Mm-hmm. But understanding owner's pay, and you and I are so in agreement on the point that you make on the podcast all the time. I don't care if you pay yourself $100, you pay yourself. To this day, 18 years later, I write myself a check to Michele Williams, from Michele Williams, endorsed by Michele Williams. And I do.
We do
and
too.
I put the amount. And then you know what I do? I hand it to my husband for him to deposit into our joint account. Mm-hmm, mm-hmm. And I do that for a couple of reasons. Number one, I need to know that I'm writing myself a check that is coming in free and clear of taxes that I can spend in my home, the same way my husband's salary comes in. Mm-hmm. I need to know that. And I need to know that it's consistent, because it drives me to all these other goals. It empowers me. It pushes me. The second thing that it does is it releases endorphins. If I just deposited it electronically into my personal bank account, I don't feel it. I want to touch it, look at it, take a stinking picture of it, and put it in a Wells Fargo bank account. And the other thing, by handing it to my husband, he sees and feels and knows what I'm doing to contribute financially to the house. Not that he doesn't know anyway, but it does something for me.
It's a reminder.
It is. And you know what's so funny? I should probably be better at it. I should probably thank him every time he gets paid. Every time I hand him that check, he looks at me and says, "Thank you so much." Like, he doesn't have to thank me, because, we're a team. We're in this together. But I am telling you, it changed our marriage when he sees me over here, because he's not actively involved in my business. And then I hand him the check and he's like, "Dang, that's pretty good." Right? So everybody, I don't care if it's $100, let's find a way to get started paying yourself.
Yeah, I say that all the time too. And I don't honestly care. Like, you're $100 if it has to start at $25.
Oh, start at $1.
Right.
Just start.
Because you know what it is, and the other part of it, it's all the things that you bring up, Michele. But the other part of it for me is, I have said that if it even is $100 a week, or if it's a more reasonable amount like $500 a week, which is not our goal. Our goal is $2,000 a week, right? That's our goal, right? Or higher. But even $500 a week, if you are not currently paying yourself and you were to put a goal of $500 a week, now you cannot blow through your week asleep. Because you have to figure out every day, holy cow, I have a $500 amount coming out of my checking account on Friday. How am I going to make sure that I've put $500 in this week to cover that check? See, and it takes it from hobby status to business status.
Yes.
And if you need it to be $100 a week because $500 to the very beginning is too scary, then do the 100 as you're saying. But the point is that what makes you move? When you get up on Monday morning, if you know you're going to write a check to yourself for $500 and you get up Monday and you're sort of like, such a great day. I think I'd rather go for a run today than work on, Mrs. Smith's project. It's sort of like, I'm sorry, sweetie, we can't do that because we have to get Mrs. Smith's proposal out so that Mrs. Smith can write us a check because I have to cut a check on Friday for $500. When I get this done, then I can go for my run. It's a whole different headset, right?
It does. And you know what? I would also push just one more step further on that. Tell somebody, tell your husband, tell a spouse, tell somebody.
Or have it automatic debit to come out.
Yes, because my husband knows the minimum of what I'm able to kind of what I consistently bring in every month.
Right.
And that gives him, because I manage all the company finances. He manages our home finances.
He's counting on that minimum
But he's
amount.
counting on that money. Mm-hmm. And so knowing that he's counting on my salary, the way that our home counts on his salary,
right?
It holds me accountable to get up and keep moving, keep going, keep doing. And then when you tie it into 1 through 8, I know how paying me is a result of setting those goals and setting those profit margins and monitoring it, so I know that the money is there.
Right, exactly.
All right, and number 10, we are aware of payroll expenses and have a plan to always have funds available. Well, it's the same kind of thing. We got to pay our people.
Right.
I don't know about you. I don't want to go work for somebody for free. I've worked for myself for free, and I didn't even like that.
That's it.
Right? And so this is about not just paying them in the moment, but notice the question. We have a plan to always have funds available.
Right.
And that's where, later we would step into a profit first method where we have a vault, where we have a savings, where we can start to save up some money in case we hit that recession, we hit that lean month, something happens. You don't want to be running down to the $0 every time if you can absolutely help it.
No, that's too scary. It's hard to sleep like that.
Oh, hard to sleep. All right. Number 11. We know our average monthly expenses and we watch them closely. This should have VIN all over it, right?
Oh my goodness, are you kidding me?
So know what you need to pay every month. And, when you take it and you really look at it, and we talk about this in the course, cash flow, cash doesn't flow in and out at the exact same rate every month. And so you need to know the average monthly expenses. And if you were to really push it forward, you need to know your high expenditure months because you have to be saving in advance for those to be able to make those payments. Some months are higher than others. The months that we're paying estimated taxes or payroll taxes, a lot of times that's a much higher month, but you need to be saving for it all along, or it's like a big old suck out right of the right. Money in the account, right?
Absolutely. I added there to Vin has our cost to be open number. What does it cost us to be open? And so we divide it evenly throughout the year. So if, our cost to be open number, for a round number is $100,000, we to your point of knowing when things are due and stuff, if in January we often don't hit $100,000 in gross sales, then when we're hitting 4 and 5 and $300,000 in May and June and July and August, Vin isn't like, hey, we've got all this extra money. He's saying, okay, let me prepay car payments. Let me prepay, put money in this account for the taxes in, the winter quarter when we're not going to have a fat checkbook. And he puts money away for bonuses because people want bonuses at Christmas, but at Christmas time we don't have a lot of money laying around. And so that's what he does. He knows his cost to be open number, and any month that we supersede that, he starts to make his decisions on to where he's going to make sure in the months that we don't typically cover the cost to be open number, he's got the funds available.
That's exactly right. And even on a very micro business level, as a one-person designer just starting, it's knowing which things you're paying once and it's covered it for the year.
Right.
It's knowing which things you need to pay monthly and being able to keep an eye on that. All of this is about managing it. It is not enough, and we've had this conversation before, LuAnn, it's not enough to come to me and say, hey, I've sold $250,000 in product or services. That's great. Tell me how much you used to run the company.
Right.
and then tell me, did you manage it well? And this is what's giving us an opportunity to realize, where is our eye on the ball and where have we taken it off?
Right. Absolutely. Love it.
Number 12, we've kind of talked about with your example, but it says we have a bank and credit card reconciliation process that is followed monthly. I've been amazed that in QuickBooks, you can go in and reconcile your bank accounts. You can reconcile credit cards in there as well, and should be doing that. Mm-hmm. And sometimes companies miss the credit card piece. They don't see that credit card. It's really like a bank account. And in QuickBooks, it shows up as a bank account. And so make sure that you are looking, and I don't mean just go in and mark it paid. I mean, look at every transaction in and out of the bank and of the credit card. And please don't think that your bookkeeper will catch every bit of it. Mm-mm. They don't know your business like you do. And thieves are sneaky, and they're looking, and they're, what went in and what went out. They may just think it's a new vendor that you're using. Mm-hmm. And so it is up to, I believe, each business owner or someone in that company to actively look at every transaction every month on those credit cards and bank statements.
Then make sure that every single one of us turns in every single receipt every single month. I don't care if it's $3 in parking on a meter in Manhattan. You have to, if you put it on a company credit card, you have to have a receipt for it. And he checks everyone line by line. And then also he looks at the credit card accounts every single morning when he does the bank accounts. And just over the holiday break, the Christmas break that we just had, a New Year break, he looks at me and he goes, we have a $1,700 debit on the such and such, a return on the credit card statement. And I was like, what do you want from me? And he's like, well, why do we have it was a chargeback on it. And it turned out, this was on a Sunday during the break. He got up, went to Window Works because there was no way he was going to go through his day and just like, oh, we'll take care of that next week when we open. And here it turned out that a job that we had done, when we finished it, how you have hyper customers, right? When we finished it, the customer wasn't 100% happy, but the installer was told when he left everything was fine. When he gets back, he tells Adriana to collect the money. Adriana collects the money. That night after hours, he called to say, now that my wife has gotten home, we've got some questions and problems on it. Can you come back? But it was literally the day before we were closing for break. So I don't know if it was Vin or Kim. They made the appointment for the installer to go back a week and a half later when we reopened to address the minor thing that they wanted. But the husband pulled back the charge on the credit card because he was skittish. He was worried that we wouldn't come back and we wouldn't do what we said we would do. And so here he is, Vin, 3 days later. Now, my point in sharing this is, if we didn't have as big a business, $1,700 being pulled back from our account could be the difference or not difference of somebody making their payroll. Like if your payroll is $500 for the week and your client pulls back $1,700 and you're not monitoring that, now you're going to, you see, right? Exactly, right? Yeah. Mm-hmm. So.
Well, and honestly, I don't want to go a week and a half wondering what happened there and where did it come from. And, it is,
again, 20 minutes.
Yeah. We could do a whole podcast on receipts and how to keep up with that. But see, I love the fact that Ben does that. He has the receipts. He can manage it, monitor it, and know what's there. And we need to be doing that or have someone in our company who can help us do that.
Yep.
All right. Moving on. We have a process for determining the need for non-budgeted purchases in our company.
Yeah.
That's an interesting one. Yeah. So what that says is, there's always the shiny bauble. There's always going to market and seeing something. Oh, I think we could use that. There's lots of opportunities to buy things and purchase things. But do we have an understanding of what's most important? Where are we spending our money? Where is extra going to? So if it has not been budgeted, how do we look at it and determine that it's really what we need? And this is about setting company values and a structure and a determination for what am I going to spend, when am I going to spend it, so that it reduces impulse buys. I saw on an Instagram story this morning a woman who was talking about she cleaned out her closet and realized that she only wore about 10% of what was in there. And the rest of it, she was like, I've got to be honest, I am a bad impulse purchaser. And some of these things looked great, or I could wear them once. And, you look at it and you think, wow, I could see how that could happen. But it happens in our businesses, too. we sign up for this new technology or we sign up for this new thing. And again, it could be the $10 and the $20 and $100 that seems like nothing at the moment, but compounded makes a big difference. And that's money we're not getting paid when we're wondering why we're not getting a salary.
Right. Good point.
Right?
Very good point. You have to have some willpower is basically what it comes down to. If you haven't budgeted for it, it doesn't mean you can never do an extra expense, but you have to do it thoughtfully. You have to evaluate, to your point, to determine, what is your process for determining the criteria of when and if you can or will step out of your projected budget.
Right. And that's a process that I like to have my clients do prior to the year, because if not, it's kind of like with anything else. When the boundary is being pushed in the moment, you can just about reconcile anything you want in your brain, right? And in life,
spin
in
it the way you want, right?
Anything you want, you can decide. But if you have a preset kind of idea of how you're going to tackle these things when they come up, and they will come up, there will be non-budgeted opportunities all year long. And if you don't have some idea of how you're going to handle that, then your money manages you instead of you managing the money.
Very good. Very good.
All right. Number 14, we have a yearly budget that we track to regularly.
Yeah.
LuAnn, I know you're now in the WCA Board of Directors. I was on for 9 years, and we always had a budgeted line items. We know what money's coming in, where it's going to be spent, how it's going to be spent. I do the same thing in my company. I know how much I'm willing to spend on technology for the year. I know how much I'm willing to spend on my automation company. I know how much I'm willing to spend on advertising. And I even have it figured out by percentages of what I want, growth, and all of that. But if I don't have something to track back to, again, it kind of goes back to that number 13. We can reconcile anything in our brain and then wonder why it didn't work out at the end of the year.
Right. We could convince ourselves.
Yeah. It all looks great in the moment. And of course I need, it's like I come home, and you'll appreciate this as a woman. So I come home with another pair of black shoes. And my husband says, don't you own a pair of black shoes? I'm like, I own like 13 pair of black shoes. I've got to have the high heel, the low heel, the kitten heel, the wedge heel. And then it's going to be dressy, and then it's going to to be casual. And then I got to have like the one that I can wear outside. Right. We can make anything work.
Patent leather and satin.
Exactly.
Yeah.
Okay. Number 15. We have an ideal client description and a vetting process that we use before we agree to work with anyone. Now, some may go, why in the world do you have that on your financial checklist? Because working with the wrong client costs you money every single time. Every single time it costs you. And if it doesn't cost you money, it costs you a bit of who you are. And that's worth a lot. It's worth more than money. And so knowing who we love to serve, going back to who are our top 2 clients, can we duplicate them? How do we find them? You make more money serving those that you love to serve than you would ever do creating a business serving people that you can't stand.
Right. 100% agree. It's the content and the happiness factor of having all of your ducks in a row and working in your zone of genius and being fulfilled. It's the reason why you can get through the tasks that you don't like to do, because the big overriding thing is happy for you. And if you're consistently attracting and dealing with the wrong client, then the big overriding thing isn't happy. And now the rest of it is just hardcore business, right?
Yeah. And then you look at the money and you don't even care if you make it anymore. You start to lose the passion and the joy. And I really believe we give up a part of our heart when, because we feel poorly. We don't want to not serve a client. We don't want to feel like we want to throw up every time they call or their email comes in. We're afraid to even open it. That is no way to live, especially in a business that we have created. That sounds like something you would happen if you work for somebody else. But when you work for yourself, goodness, build a business you love, not one that you hate or that makes you feel terrible every day, right?
Exactly.
That's got to go.
Right.
Okay, number 16, we have implemented and used a cash management system. Now, a cash management system is different than QuickBooks. That's a financial management system. So a cash management system is something like a Profit First or a hybrid of that, something like what Vin uses. Here's how the money's coming in. Here's how I'm separating out what goes to bonuses. Here's how I'm allocating money for this. It's making a decision that you are going to be in control of managing where the cash goes.
I love it. I love that distinction. That's a very important distinction because QuickBooks is showing you what you're doing. You're working with it. You're seeing it. But the cash management is exactly as you said. It's the way you look ahead and say, I don't necessarily run at profit levels in January, so let me prepay this and let me do this when I have a higher cash flow. Great analogy, a great distinction there.
And I'll tell you a way that you can tell if you need a cash management system. And that is if you were to run your profit and loss statement, and this happens all the time, and you look at it and you look down at net profit, and net profit gives you a number. Let's say it gives you $125,000, and you look over at the balance sheet and you realize you have 12 in your bank account. Okay? Because most people say to me, the profit and loss says I've earned this amount of money, but that money is nowhere. I don't know where the money is.
Right.
A cash management system would show you where the money is and where it's gone and how it's been spent. So it's making choices that put you in control of spending the money. And I want to give one quick comment about Profit First, because I've heard a lot of people say it doesn't work or it can't work in this situation. I'm going to tell you it can work in every situation, but it may need to be modified. It's not a static management system, meaning you can modify it to meet the needs of your company. It's really about saving the money in the places that it needs to be saved. So don't let it freak you out if you read the book or listen to Audible and you go, I can't do it just like that. I help people take it and make it work for them. I help them do the VIN part, right? Where VIN's like, duh, LuAnn, we've been doing equivalent. It's not a new thing. It's the same as the Dave Ramsey. It's not a new thing. So just know that whatever system you use, whatever you want to call it, it's necessary.
Right. I love that. It is true. It's no different than any interior designer that comes across a project management formula. They tweak it to their firm. So somebody's got a 10-step and somebody's got a 12-step and somebody's got a this. You take the best of it, you tweak it and make it work what's comfortable for you. But the point is that people have created these formulas and these roadmaps. And if you're struggling, at least start with the roadmap and work the system. And then as you gain mastery, then you can tweak it and make it your own, right?
Right. It's kind of like a template system.
Exactly.
So if you go into it thinking this is a template system, then you're going to be much better off and you can make it yours. Mm-hmm. So just want to, I'm getting a lot of calls, of course, at the beginning of the year to ask about that. So I just want to kind of put that out there.
Good.
Okay. Number 17. This is the one that kind of bit me years ago. We regularly consider the tax implications of our company financials. So, couple of things that happen to me, and I see this quite often. Somebody will call me and they'll say, my accountant says that my estimated taxes need to be $2,000 a quarter. And I go, okay, what is that based upon? Because $2,000 a quarter, not knowing what it's based upon, is not really putting you in a position to own the tax implications. That happened to me one year. I had been told, here's the estimated taxes you need to make. But thankfully, I knew based on what amount. I had already earned that amount by June of that year. And so at that point, if I had not been aware that tax that I was based on that amount, I was going to be, I was only going to have paid half of my taxes at the end of the year. And now I'm running into penalty. And so by knowing, here's what your estimated taxes are, or here's where you are, state taxes, federal taxes, self-employment taxes. I also got caught one year where I brought the money into the house, not thinking, not preparing, didn't have a cash management system for taxes. And then all of a sudden they came up and they wanted another $18,000 to $20,000. And we're going around figuring out where am I going to get an extra $20,000 lying around to pay off the fact that I had a successful year. Yes. And so really knowing, and it's not just one, if you've got payroll, there's payroll taxes. We're taxed. We just are. And so we need to understand how not to spend that money. That's not our money. That is the government's money. And I'm going to tell you right now, if they want their money, they're going to come get their money.
That's right.
So don't bring it into your house.
Right. Exactly right. No, that's an awesome point. I love that clarity there, that you were advised that it was $2,000, but you knew enough to ask based on what earning. And then you were cognizant enough to understand that you hit that earning at only halfway point in the year. And so you automatically understood that, I'm probably going to owe a lot more than $2,000. Whereas, and look, I could see being a newer entrepreneur and feeling very empowered by sitting down with my CPA at the beginning of the year and having my CPA tell me I can expect it to be $2,000 and feeling like I've got this. I know what it is, blah, blah, blah. It's what you started with, knowing what you don't know. Like you wouldn't even know to say, what are you basing that on? Possibly. You might not know to say that. And then you are that entrepreneur that is going to be blindsided. And the accountant's going to look at you and go, well, how did you not figure that out? And you're like, yeah, that's why I was doing my due diligence to have the conversation with you. So this is, of all of the steps, this is, for me, one of the clearest examples of a lesson from you, Michele, on what do I know and what do I not know? Because that is so good to be able to just have that. Don't just know what the estimated is, know what it's based on so that you can mentally internalize it throughout your year-to-date sales and so forth.
That's right. And, we're in a year of the taxes being reworked, and they'll probably continue to be reworked over time, right? Mm-hmm. And so there are a lot of different things, not even just the tax implications of what do I owe based on what, but what tax bracket am I in? Where do I need to sell or quit selling to enter the next bracket? Am I prepared to enter that bracket? What comes with it? Because there are now certain tax laws that if you earn a certain amount, they go away. And, certain benefits go away. You need to know that. You need to know, is it a product or a service that you're selling? The landscape of our taxes has shifted, and we have to know so that we can plan the business to maximize our profits. And this also will be a highlight, because if you don't have an accountant that can have these conversations with you, that should be a big flag that you need to find somebody who will work with you on the same side of the table as you to fight for the profits in your company.
Absolutely.
So if you have an accountant who's like, I don't really want to talk about that, or they only want to talk to you once a year, that should raise a flag.
Absolutely. And that's perfect lead in to Peter Lang, the designer CPA, who's one of our co-authors. Yes. What I love about Peter is that he literally specializes only in interior designers. He doesn't take any other clients other than interior designers. And you know how valuable that is? That an accountant is his goal in life is to work with your exact business model, because the designer business model is a very complicated business model from a financial standpoint, between the hourly fees and the markups and the, cost of goods on the product and, subcontractors and vendors. It's insanely complicated business model. And Peter Lang, and he's so open, and he's not the guy that's like, hey, don't call me, I'll call you. His thing is he wants you to have at least, at minimum, one meeting a month with him. So if you're not interested in that, he's like, I need to be a partner in your business. I need to be able to help you. In order to do that, we need to have open communication. So I have to give him a plug. I love him.
Yeah, and I think that is super important, because I know Peter also, he's getting ready to come on my podcast as well.
Oh, good.
Yeah, he is one of those that wants you to understand.
Right.
And that's the point here, is getting experts on your team that their goals for you to get it and for you to understand, not to have you blindsided. When I send and refer to either bookkeepers or accountants, I will only send and refer to those who understand the interior design industry, because we hit every blasted aspect of financial accounting, to your point. Every single one of them. And for it to be such a, as people look out and think it's so glamorous and fun, there is a lot of work and a lot of financial work. That's why I'm not asking any of the designers here, right? We can't know it all. There's too much. Right. I don't know it all. We can't. And that's why everybody kind of has their piece and their part that they do really, really well. But the goal should be that you assemble this team that's watching out for you for what they know and for what you don't.
Right, right.
Okay, number 18, just 3 more, and then everybody can take a deep breath. And as my teacher used to say, shake out the willies. So number 18, in your company, how would you answer this question? We have ongoing conversations with our accountant and our bookkeeper and our financial coach. Sometimes people will say, maybe I have an accountant, I don't need a coach, or I have a coach, I don't need a bookkeeper. And the truth is you may not need all of these all the time, but each of these has their specialty and has their lane. I work with a lot of accountants and a lot of bookkeepers, and I speak a language in the middle of all of it, or I'm coming at it, looking at it from a completely different angle. It's like we just had the great big football playoff, right, between Alabama and Clemson. Each of those don't have one coach. They've got a head coach.
Right.
And then they've got all the different coaches. You can watch baseball. There's a first base coach and a third base coach. They all work together for the team. And so it may be that you need all of these to work together for your team. You need to have conversations, and you need to be with people who are on the same side of the table as you. If you can visualize, if you feel like when you go into these meetings that you are on the opposite side of the table, always trying to get a point across, always feeling stupid, then that is an indicator that you are not with somebody who is probably a good fit or match for you.
Right. I always say, remember, you're the customer. Would you ever talk down or patronize one of your clients? So Don't accept it when you're the one who is the client, ever.
And speak up. Right. If you don't understand, speak up. Don't just nod your head yes, because there is a lot of responsibility sitting on our shoulders to understand our company. Mm-hmm. If I don't understand something, I'm going to say, you know what? I don't understand that. Can you explain that? And if they explain it and I still don't understand it, I'm going to say, I am sorry. I still don't get it. Could you give me another example? Is there another way we could approach this? Because I am missing something.
And it does happen that you miss it. I mean, I go through that with Vinny. He'll go to explain something and I'll be like, I don't get it. And the second or third time, he'll be like, Lou. And I'll be like, buddy, I don't get it. You want me to teach you the crossword puzzle on Sunday? Like, I have a superpower, you have a superpower. Start over again.
Right. And sometimes it's just changing the words. It's changing the example. It's approaching it from a different method, right? Just like we all learn, kinesthetic, auditory, visual. We have different ways of learning. Ask for what you need. If I could say anything on top of all of this, is ask for what you need. Don't be afraid. Do not let shame of either not looking at it, not understanding it, keep you in shame. Raise your hand and say, me, tell me. And then that's going to be super helpful.
Yeah, love that. I love that, Michele. Great advice there.
Okay, number 19. We have confidence in the achievability of our financial goals. So first, this is assuming that you have financial goals. And then you're really asking yourself, how confident are you in the fact that you have created a strategy and a focus to achieve them? And if your confidence level is a 1, that just means that you have some work to do to make sure the other pieces and parts. Maybe you've got to work on your marketing strategy. Maybe you need to work on your referrals. Maybe you need to work on your ideal client. Maybe you just need to work on your own confidence to go out and to do what you need to do. Maybe it's the consistency, like you said, LuAnn, the consistency of knowing I got to pay myself means I can't go for a run or go play tennis and go have lunch today. I really need to get this proposal out the door. Right. But really ask yourself, if you have a low confidence, why? And what can you do to make it a high confidence?
I like that. If you have a low confidence, ask why. That's perfect. I love that.
And then lastly, we are careful not to commingle funds in any way. I touched on this earlier, but commingling funds is when you mix up funds between personal and business. And for the smaller businesses that are just starting out, that are coming in as maybe a sole proprietor, there's not as many regulations around bank accounts and all those kinds of things. Be very careful. If you really want the business to be a business and not a hobby, one of the first indicators is that the only things that run in and out of that business are business expenses and business income. If somebody writes a check to Michele Williams, I still deposit it in the Scarlet Thread Consulting account because it was work done for Scarlet Thread Consulting. But I'm not going to go out and buy groceries for my house, even if the money's sitting in the account. I'm going to write myself a check if I need money to Michele as either salary, owner's draw, distribution, whatever, however I need to do that. and then I'm going to go to the grocery store.
Right.
So just be very careful not to do that, because that's what allows you to have a clear picture of your financials. If you start mixing in, I paid for shoes, I paid for braces, I paid for a meal, and I went on a vacation, and it's mixed into business, you're going to have a hard time really looking at it without extra work to determine how profitable your business is.
Yeah.
And when you do all this work, you're going to add up your numbers, multiply it out, and then the document is going to give you a score. The goal is for you to have a score of 80% and above. But do not worry if your score is lower than 80%. What that does is tells you where to start looking at your business. Start with the ones. Try to get them up to twos. Then work on your twos and try to get them to threes. Work on your threes and try to get them to fours. Don't go spend time doing more of the thing that you have a 5 on when you got a few glaring ones. Be strong and courageous and go out and jump on those ones.
I love it, Michele. And the other thing about that is it doesn't happen overnight. If it's not your superpower and you do have more than a few ones or twos that you're not happy about, it's not something that is going to just be easy peasy. You have to find the right people. You have to be intentional. You have to just set aside the time. But the time is going to pass. And that's what I always say to everybody that I try and help and talk to. It's like, look, it's going to be a month from now whether you do what you want to do for yourself and your business or not. So you may as well plug it in and do it, right?
Right. And why do we think we need to know all of this on top of design, on top of everything else?
Exactly.
We don't expect any other business owner or type to do all of it all the time. And it really is an unfair expectation that we put on ourselves, and it's very limiting.
Yeah, you have to know enough to be able to monitor it, understand it, and be an active partner in with your accountant, with your bookkeeper, with your coach, whoever it is. You have to have the working knowledge of it so that you can see what you said in the beginning. So you know what you do not know. You know how to look for it and how to monitor it. That's it. You don't need to be. It's like I sell custom window treatments. I don't know how to install custom window treatments. I don't know how to do it. I don't know how to use a drill. I don't know how to put it in. There are many window treatment professionals, women and men, that know how to sell and know how to install them. I'm not one of them. But I know how to give clear information to my installer so that he can do it. I know how to have conversations with my installer. I know how to hire a great installer. I know what I'm looking for, right? So you don't have to know it all. You have to know it well enough to monitor and be an active partner in it.
Absolutely.
I love it. I love it. So, well, I hope that everybody hung in here for this, Michele, because I have to tell you, every time you're on the show, you just blow me away. You're so smart. I want to remind everybody that you have your own podcast, Profit is a Choice, and that it's an excellent podcast, and it's a great place if these are issues that you are dealing with in your business and you need some help and you need some guidance and confidence in it, that Michele's podcast is the perfect place to do that. And then, if you love her as much as I love her and you need to be in her space, you've got to join us in March in New Jersey at LuAnn Niagara Live. It's about the conversation. You can find tickets for that on LuAnnLive.com. If you go directly to the LuAnnNiagara.com website, you'll find it on Attend a Live event, and it's right there, LuAnn Niagara Live. So Nicole is going to be there, Heimer, we've got Fred Burns, we've got Stacy Brown Randall, we've got Nancy G. There's 12 of them, the 12 of my co-authors, plus myself. And don't forget, we've got Darla Powell from Wingnut Social, and her wife Natalie are our MC. So if you are not familiar with Darla Powell, head over to Wingnut Social Podcast and learn about her. It's going to be off the hook. That's what I'm just keep saying the same thing. It's going to be off the hook because it is, isn't it?
Oh, I'm excited. I can't wait. It's going to be a lot of fun.
It really is. And the thing is, what it is it's funny. I'm going to take another minute, even though this has been a long show, because I am getting a lot of questions about what is the day going to be like and the days. And really what it is it's going to be a conversation with, say, for example, Michele, myself, and one interior designer that has appeared on the show before. And the three of us are going to be on stage, and we're going to talk about an aspect, in Michele's case, an aspect of the financial health of your business. And so Michele will be there to share the expertise of herself as a coach who teaches this. The designer will be there to say, and when I tried that, remember how we said a few moments ago, tweak it for yourself. So the designer might say, yes, I understand that's how you suggest doing it, but for me, it works great this way. And then I'm there to say, wait, I didn't understand what you guys are talking about. Go back and rewind. Like, go back and wait. Let's say that again. Or what I also do is, okay, so what you're saying is this, right? And we're going to summarize it for everybody. So it's really going to be like watching 12 live podcasts. And what we're going to do is we're going to do these for about 40 minutes or so, and then we're going to leave a good 30 minutes for each one for Q&A. So if you just went through this entire show with Michele and myself and you thought, I don't understand this, I don't get this, you're going to be able to raise your hand. And you're going to be able to say, I need to understand this a little bit better. And then, of course, we're going to be together for the 2 full days. So once Michele comes off the stage, if you have even another question or it's more personal, this is not the type of event where the speakers are in for their hour and then they're out the door. No, all 12 of my co-authors and all 12 of the designer panelists are going to be there for the full 2.5-day event so that you're going to have access to all of us at the networking sessions, at the book signing part, at the breakfast, at the lunch, at the dinners. All access all the time. It's not, we're in, the green room, we're in the, I go to podcast conventions and there's the speakers lounge. And it's like, you know what? How about you bring those speakers out here with the rest of us? Because I just spent, $500 or $600 or $700 or $800 to be here, plus plane fare and hotel. And I'd like to have access to them. So I kind of designed this conference with all the things in mind that I love at conferences I've been to and all the things in mind that really tick me off at conferences.
I love it.
Don't you hate that when you want to ask a speaker something and they're not around except when they're on stage? That makes me crazy. So all access all the time. We're going to be exhausted, but it's going to be exhilarating. It's going to be awesome.
Yeah, I can't wait. I'm super excited about it.
Me too. So thank you so much, Michele, for joining me today. As I said, you are always, just so spot on with your advice. And we would tell us your website so I don't mess it up.
Sure. It's scarletthreadconsulting.com. And if you want to get a copy of what we just went over on the podcast, there's a purple bar at the top that says, want to know how healthy your business is financially? Click here. And you can click there. If you do that and want to follow up and understand more, like the details behind all that, you can click on, I want to have a better understanding of my financials, and it will lead you to the Understanding Your Financials course. So it's all right there on the main page.
I love it. All righty. Thank you so much for joining me. I appreciate all of you being with us every single day when we do what we do here. And thank you, Michele, so much. I appreciate you very much as well.
Always my pleasure. Thank you.
Thank you so much for joining me again today. This podcast is a production of WindowWorks, your resource for custom window treatments and awnings. To learn how we can help you on your next interior design project, go to www.windowworks-nj.com. And if you're interested in working with me on your business, either through masterminds or one-on-one coaching, or you want to know how to get my book, The Making of a Well-Designed Business, or you just want to know what's going on in the podcast land and where I'm going to be, all of that is found at LuAnnNigara.com. Thank you so much. Have an excellent day.